Hey, what's up everyone? Welcome back to the channel. So, maybe you've heard about day trading. Maybe you've seen videos of traders clicking buttons, watching charts, and making or losing money in just minutes. You've probably seen videos like this one. But one question that everyone asks when they first get curious about this world is, backhand index pointing right, what exactly can I trade as a day trader? Is it just stocks? Is it crypto? Futures? Forex? Options? Well, the answer is you have options, lots of them. And today, I am gonna walk you through the main financial markets that day traders operate in, how they work, real-life examples, and the pros and cons of each. So, grab a coffee, get comfortable, and let's dive in. Bank 1. Stocks. The most popular choice. Let us start with the most obvious one, stocks. This is where most people start. Stocks are shares of companies like Apple, Tesla, Amazon, Nvidia, Meta, and so on. As a day trader, you buy a stock when you think the price will go up, or you can sell it short when you think the price will go down, all within the same day. Example, let's say you're watching Tesla, TSLA. It's priced at $250 per share. You believe it's going to move up, so you buy 100 shares at $250. The price jumps to $252, and you sell. That's $2 per share, $200 profit, in maybe an hour. Sounds simple, right? But the flip side is, if Tesla drops to $248, that's $200 loss. Pros: super liquid, lots of buyers and sellers, tons of information, news, and data available. Great for pattern trading and momentum. Cons: the PDT rule. If you have less than $25,000 in a margin account in the U.S., you can only make 3-day trades every 5 days. Less leverage compared to other markets. Fire 2. Options. Big moves with small money. Next, we have options. Options are contracts that represent the right to buy or sell a stock at a specific price within a certain time. Traders use them because options can deliver huge percentage gains, but also big risks. Example, let us say Tesla is at $250. You buy a call option for $5.00 per share. Remember, each option controls 100 shares, so you spend $500. If the option goes from $5 to $6, that's a $100 profit on just a $500 trade. But if Tesla doesn't move your way quickly enough, that option can go to zero. Pros: low cost, high potential reward. Leverage without borrowing from brokers. Cons: options expire, sometimes the same day. Super volatile. Advanced, not beginner-friendly without study. Chart increasing. 3. Futures, the pro trader's playground. Now, let's talk about futures contracts. Futures are agreements to buy or sell an asset at a future date, but day traders are never holding them until then. You open and close within the same day. Popular futures for day traders: S&P 500 E-mini, ES, NASDAQ E-mini, NQ, crude oil, CL, gold, GC, and micro futures like MES and MNQ, which are great for smaller accounts. Example, let's say the S&P 500 E-mini, ES, is at 5,000.00. You believe the market's going up. It rises to 5,002.00. That's a 2-point move. Each point on the ES is worth $50. So you make 2 times $50 equals $100. This could happen in 10 minutes or less. Pros: no PDT rule. You can trade with even $1,000 or $2,000. High leverage. Open nearly 24 hours a day, 5 days a week. Cons: leverage can be dangerous. Fast profits or fast losses. Requires discipline and solid risk management. Globe showing America's 4. Forex, the global currency market. Now, let's discuss Forex, foreign exchange. This is the largest market in the world. Over $6 trillion traded every day. Here, you trade currency pairs, like Euro to US dollar, Euro versus US dollar, Pound sterling to US dollar, British pound versus US dollar to Japanese yen, US dollar versus Japanese yen. Example, you believe the euro will rise against the US dollar. You buy euro to US dollar at 1.1000. The price moves to 1.1020. That's a 20-pip move. Depending on your lot size, that's $20, $200, or $2,000 profit. But if it moves against you, same story, big losses. Pros: open 24 hours a day, 5 days a week. Huge liquidity. High leverage, even with small accounts. Cons: Very volatile. News events can cause wild moves. Leverage can wipe accounts fast without good risk control. 5. Cryptocurrencies, the 24/7 casino or opportunity. Last but not least, crypto. Crypto is the only market that's open 24/7, including weekends. You can trade coins like Bitcoin, BTC, Ethereum, ETH, Solana, SOL, Dogecoin, Doge, and thousands more. Example, Bitcoin is at $60,000. You believe it'll move up, so you buy. It jumps to $60,500. That's a $500 move per Bitcoin. If you trade with 5x leverage, that $500 move becomes $2,500 profit. But if it moves against you, same story, big losses. Pros: open 24/7, trade anytime, even Sunday at 3 a.m. High volatility equals more opportunities. Lower barrier to entry, you can start with small amounts. Cons: extreme volatility, less regulated, prone to sudden crashes and pumps. Lightbulb final thoughts: which market should you choose? So, which market is best for day trading? Honestly, it depends on you. Your capital, your risk tolerance, your schedule, your personality. If you like structure and traditional markets, stocks or futures are great. If you want to trade any time of day or night, crypto or Forex might be more your style. The important thing is this: pick one. Focus. Master it. Don't try to trade everything. Closing. So yeah, now you know. Day traders aren't just stock traders. There's a whole world of assets out there. If you found this video helpful, smash that like button, leave me a comment with any questions, and subscribe for more content like this. Thanks for watching. And as always, trade safe, trade smart. See you in the next one.